What is going on YouTube? It's Brendan from Market Makers. Really happy to bring you a Bitcoin exclusive video today, setting up my next big short. We're going to look at a potential 50% move to the upside, a potential 50% move to the downside based off Dante's descent. Why is Dante's descent important? Because this allowed me to give you that 48.2 trade that caused a 64% decline in the marketplace, as well as this trade we just traded recently here on YouTube and in our Discord, 27% decline in the marketplace. We're going to go over the next leg of Dante's descent. We're going to continue your education in advanced Fibonacci concepts and esoteric trading, sacred geometry, all based on Wyckoff market structure. No other channel is giving you this type of alpha. I would appreciate if you guys like and subscribe. You want to come trade with us? Then check out our Discord. The link is in the video description. Download Discord. Our sale ends at the end of the month. 20 bucks gets you in the room. Come see why 13,000 people are on our Discord. Support our sponsors to support this channel. BITGET for all the cryptos, SimpleFX for equities, commodities, and Forex. All that detail, all that information in the video description. All right, guys, so let's recap real quick where we are. We're going to go over Dante's descent. This is one of those videos, and I've only said this twice in the last year. You need to watch this video front to back. This video is going to have a lot of information for you. It's going to help you be able to forecast the markets, understand advanced concepts, and look to see where price could potentially go. But let's start here in the beginning. How can you measure these tops? I want to show you this here so you'll understand what I'm doing later in this video. So as you guys know, I came to crypto last, March, April, May, sometime in there. We started our Discord, YouTube in May, June, and this is where I came into in this decline. Now, lots of people had videos of Bitcoin going to 200K. 250K. You had commentators on YouTube talking about 500K. You had billionaires like Novogratz talking about Bitcoin going to 500K, a million. You heard all these crazy predictions. But if you understand how to utilize Fibonacci, how to utilize sacred geometry in the marketplace, you would be able to make these predictions, understanding the market cycle, the bubble cycle that we are in. That's where you tie in that larger market cycle. You have to bring that into your charts to understand how to accurately make predictions. If we look at our pandemic low, go to our Wyckoff backup, come back down to our pandemic lows, gives us a price projection. Look at your 1618, 65,733. Wick above it, bodies close below it. You almost got to it here on the first top alone. If you want to find further confluence for where this could go, but wait, how did you know we weren't going to shoot up and just go to 100K? I start looking at things. I understand the market structure. This would be called Wyckoff backup. After your first impulse here, here's your backup range, broke out of your backup. So then what do you go to? You're going to Wyckoff distribution here in this box, okay? This could have been another backup, but this ended up forming a top. And we can go ahead and mark this off. Had a topping pattern form, had a double top pattern form, struggling with up thrust. Now, what we can do here is take our pivot out down to that first base, and then look where the 1272, 67,976 would take you on a retracement leg. Again, right in this same area. 1272, a lot of people use these numbers. They're default numbers. They don't know what they mean. 1272 is the square root of 1618. This is part of Kepler's triangle. Kepler, Johannes Kepler, 16th century German mathematician, he discovered the Earth went around the sun in an elliptical orbit. But his biggest contribution for speculators like you and I is the Kepler's triangle. This is the unity of Pythagoras with the golden ratio in a triangle. So this is part of sacred geometry. This number 1272 comes as a square root of 1618. So let's look for more confluence, because that's not enough to tell you this is an extremely difficult area to break, to understand that you're trading in a macro bubble cycle. So if we did an impulse once again out of Wyckoff accumulation down here, back to our next backup, where does that 1618 land? Do you see all of all of the resistance forming here with key Fibonacci ratios gives you your top. And of course, Wyckoff gives you the structure of the marketplace. So this is where Dante's descent comes into play. We had our distribution box form up here on the weekly time frame. We broke out, I just showed you here, of our accumulation box here in the base. We came back up for a second top. Law of three pattern. Remember, key concept in natural law trading. Charles Dow, W.D. Gann, believed the market moved in threes, okay? And you can see this in the larger macro sense in the marketplace. I go over these concepts routinely on this channel. So where are we now? Now where we are is Dante's descent. And let's set the table for Dante's descent. Dante's descent, this is a topping pattern. We're going to look at key market pivots here in the marketplace. But this week coming up is going to set the table for what happens for the rest of the year, perhaps into the first week or two of January 2023 as well. The CPI print comes out Tuesday. Last time we had the CPI, it came in below projections. The markets rallied hard, the equity markets. They had the biggest pump candles they've had in 2.5 years. If we get a low CPI and Powell comes out the next day on Wednesday, gives a very measured statement, does the 50 basis point hike that's baked in the market, you could see this Santa Claus rally that everybody on TV wants to happen. Remember, 90% of the money at all times is long in the marketplace. They want this rally to happen. Now, if we get a high CPI, you can sell off. If Powell does something that surprises the market, does 75 basis points, or gives really hawkish guidance about we're going to go 50, 50, 50, this could cause a market sell-off, which is why savvy traders, regardless of how you view the overall market, look at downside targets and upside targets, and that's what we're doing in this video. So let's go ahead and jump into Dante's descent. Dante's descent. 20 bar tops, right? How did we formulate these 20 bar tops? Let me start with the sequencing. I showed you guys this in a previous video, but lots of people had questions about this. When you're looking at market sequencing, when you're looking at key moves, you have to use a concept called wave filtering, because you're going to have moves in the marketplace all over the place. And when you're looking at wave filtering, we're setting up these moves in the market. We have a 25% up move, a 46% up move, come down to this move, another 21% up move. The market has a lot of symmetry to it. And if you can figure out the divine blueprint for the market cycle where price will vibrate and meet the vector of time, you can get high probability trades. So looking at this sequencing here, guys, 25, 46, 21, 43, I just simply took out with using wave filtering these smaller movements in the market. And when I did this and started to examine what patterns may be presenting themselves, I noticed my Dante's descent topping pattern. Again, an homage to Dante, his descent into the different levels of hell. So you have your 20 bars. Go ahead and get rid of these price movements. And now we're in here for our third topping pattern. Again, law of three pattern. So we're going to go ahead and project this out, and we're going to talk about where this could go. Now, the problem you have, as you know, these are weekly candles, right? So there's 7 days here in each candle. Let's go ahead and mark this day off because this projects out to January 2nd, 2023. We're going to go into the daily time frame to see if we can narrow this down. Find a pattern within a pattern that could give us the actual date and potentially the actual price, where price will move up to in a wave fashion, and then price will descend from to complete our law of three, Dante's descent into hell. Let's go ahead and do that. Let's jump on the daily time frame. Daily time frame. Now, I use the exact same dates. I guess we should go and go over that. All-time high, March 28th and August 15th. Okay, these are off the weekly candles. Also of note here, and I've showed you this many times before, none of these swing highs from the topping pattern were ever defeated, right? None of them. So this is where we're at. So your current market top here, 25,207. Go to the daily time frame. You can see your all-time high. You can see your date here of March 28th, right? This is where the boxes change over. And of course, you can see your date here, August 15th. This is the projection The next 20 bar weekly pattern would take you to January 2nd. But I want to zoom in into this, guys. I'm going to share with you. Let's look at this because I found a pattern within a pattern, which also gave me this trade setup that I shared with you on Bitcoin for that 28% drop. And this is the first time I'm talking about this subsequent pattern that I found. I noticed when I zoomed into my previous top, I'm going to go ahead and do this backwards so you can see the numbers appear up top here. If we go from our swing low up to our swing high, this gave me 82 bars. There's a predictive nature to this Dante's descent. The market moves in patterns. So if we take that 82 bars from this changeover here, project out 82 bars, look where this landed you, exactly where I gave you the trade. Now you guys know part of my secret. That MFI divergence, obviously. This projected out 82 bars, 28% drop in the marketplace. Depending on your exchange, 26, 27, 28% drop in the marketplace. Now this predictive nature didn't stop here. So when I did this again, repeating this exact same, going from the low to the high, 59 bars. Okay, so now at this box changeover, these two smaller boxes within this larger topping pattern, let's go out 59 bars. 59 bars from here will take you out to January 3rd. Do you see this? January 3rd. So we want to find a target here on January 3rd where we could actually get up to. So this January 2nd date, that's the weekly candle, encompasses January 3rd. But if this topping pattern is accurate, again, 82 gave us the 28% drop in the market. And now we have 59 bars telling us January 3rd, which would be the completion of our larger topping pattern, which would pull down something like that. So you see that? Symmetry in the marketplace. Let's go ahead and get rid of that. 59 bars. Now, something else that was interesting, within this 59 bars, if we know that we're coming up to a top, then we already know we have a low in the marketplace, right? So we already have a low in the marketplace. We have a top in the marketplace from the previous changeover of the box. So we can do that same projection going back towards the top here. And if we do this projection going back towards the top, you have 16 bars. Why is that significant? Okay, let me show you why this is significant. We have 59 bars, we have 16 bars based off these projections. Now, what's interesting, I love patterns. This is so much fun when you can decipher and decode the marketplace. Using the same technique from our first top, right? The same technique that gave us the 82 bars, the 59 bars, the 16 bars. Let's go back and do our low to our high, and see what we come up with. We come up with 75 bars. 75 bars, that subset from the low to the high. 59 bars and 16 bars equals 75 bars. You have a completed harmonic vibration cycle of decay in the marketplace in a law of three pattern. You have market symmetry through all of the boxes. And we know if we do get this 16 bar drop after this top, we can draw that out as well. But let's focus first on the actual price action. I know this is a lot of information. You may have to watch this video a couple of times if you want to try to replicate what I'm doing here, but we have a drop that will form. We'll make this box a different color off the 16 bars, and that will happen after this date. So let's just stick this over here somewhere. Let's turn this gold, and we'll come back to it. So 82 bars, 59 bars. Let's finish our projection. Get this 59 bars out here. From here to here's your 59 bars. And let's see where this top is going to go. And let's go ahead and make this red to match the other box, because this is part of that topping pattern. All right, so we have a lot of information we just went over. Now, when we're looking at projection of targets, there's Fibonacci techniques to do this. There's Fibonacci projections. You want to find Fibonacci confluence. You can do that for measuring wave highs, all part of waveform trading, to wave lows. So what we're looking for here is we're going to go ahead and grab this high here from that changeover of the tops. come all the way down to this move here, okay? This isn't the dollar for dollar low. You got slightly lower here, but what I'm looking at here is this impulse move down. So I'm using Fibonacci to do this. You can see that one fib lines you up, obviously, with your market top that cannot be defeated at 25,214. Now I'm going to take a smaller wave projection from this actual drop here on that one fib down to the same exact point. And you can see your Fibonacci confluence providing ratios here, overlaying each other, two proportionally different size waves, but you're seeing confluence at certain levels for where there will be resistance, right? So how do you know which level to choose? Well, we're going to keep decoding this and getting down into this. Let's just go ahead and mark some of these off with a white line. Go ahead and just mark this one off. You can see the confluence of the overlaying fib ratios. Obviously, you have this level here as well. And then we're going to have this level down here. So we'll go ahead and mark that off as well. Now, we have these multiple levels here for confluence. So we're going to start looking for other patterns to see where price could get to on a projection. Now, if we're going to do this, let's go ahead and take off these fib levels. I want to show you another technique that many people are not familiar with, but this happens to do with market symmetry. This is, in technical analysis terms, AB equals CD. In Elliott wave terms, this may be A equals C. But if you use your trend-based fib, what we're looking for specifically is the 100% retracement. So we're looking for the 100% retracement of this move in the marketplace. Is this our low here? Up to here. Oh, did that wrong. 100% retracement. So we're going to go up. We want our upwards projection. So we're starting at the base, the peak, and then down to that same base. Look at your 100%. Lands you right here at 23,103. Look at your other levels on the trend-based fib. So now we've measured waves multiple ways. Okay, this is very important key concept in advanced Fibonacci, understanding Fibonacci confluence. We measured a wave from this peak down to this same base. We measured a wave from this peak down to the same base. We use a trend-based fib, which is giving us a projection of the next move, looking specifically for that one fib, a 100% retracement. This gives you market symmetry of this move, your AB to your C, and this would be your D. Okay, so this gives you market symmetry in this leg of the move. Now we have confluence here at these other levels, 618 at 20,187, 786 at 21,470, and the one fib at 23,103. But there's reasons the 23,103 may be the best target. I'm going to show you that now. Let's go ahead and take off some of this, get rid of some of these lines and these levels. And what we'll do, we'll go ahead and let's leave this trend-based fib on here down to our same low. Now you can see this. Okay, so this is where price could rise to by January 3rd, giving us our topping pattern completion, the one fib, a 100% retracement from this move, a projection. Now, do we have anything that can demonstrate this as well in a pattern? And the answer is yes. Let's look at our ABCD tool. Now, what I'm going to draw here, I'll show you in just one second. Mimicking these same moves of the trend-based fib, coming up. We'll try to get this as accurate as possible on that line right there. Look what you have here. We talked earlier about Johannes Kepler. This is basically an offset diamond pattern, but what you have is 1272 essentially and 786. You have the square root of phi, 1618. Phi, by the way, that term comes from Phimidius. He was the key integral in designing the Parthenon in Greece. His name was Phimidius, spelled P-H-I. So this is where phi comes from. This is the square root of 1618. 786 is the square root of 618. You have Kepler's triangles essentially overlaid on each other. You see how this is essentially two triangles, also forming an offset diamond pattern. This is where price will want to come to if we get a big enough rally based on those preconditions I gave you guys earlier in this video. Lower CPI, PAL being measured, basically market expectations met. If you get that Santa Claus rally, you're looking to the upside and you're looking at this 23,103. This is exactly what I think will happen with price if we get through these other levels of the 20,187, 21,470. But you have market symmetry here at the 100% retracement, multiple Fibonacci confluences. You have essentially an offset diamond pattern, which is reflective of Kepler's triangle's sacred geometry in the marketplace, telling me January 3rd, guys, this is where you want to watch on January 3rd if we get upward momentum. We're going to go over the downside as well here shortly, but let's finish up this pattern. I'm trying to get it exactly on the dot. It's almost impossible to do. So how do we get this 16 bar downside? How do we get this projection? Well, this projection, my friends, is much easier. Let's go ahead and move this down, because if this is our target, again, we have earlier resistance levels, but if this is our target, then we know where we can get a projection from. So let's go ahead and do this. This Fibonacci projection will be quite simple. We can just take a fib retracement, come here to this market low. Well, these are so close, between $20 or $30 of each other, we'll just use the same low to stay consistent. Come up here, try to line it up on that line, and look at where your projections take you down to. Obviously, 15,469 is 100% retracement as your base. 1272, 13,4, okay, 13,4. 1618 brings you to 10,753. 10,753. Is this achievable? Well, let's look at our sequencing really quickly, and I want to show you something. So 10,753. Let's look at Bitcoin back on the weekly. Now, you guys know it's a year ago this month, as a matter of fact, that I showed you where Bitcoin would ultimately go to for a bottom. Not the bottom. I don't think it will be the bottom, as the market overall, the equities, the economy hasn't rolled over completely, but a bottom. And everybody thought I was crazy. Trend-based fib, swing high, swing low, swing high. 10,565. A year ago, you got that target, okay? 10,565. Based on this projection now, if we do rally up to that level of 23,103, you're looking at 10,753, and we have a date for that because that is 16 bars. So let's go ahead and extend this out. Make sure we have this level here because we get our date, mark off our date for this. 16 bars, got to be right there. January 3rd, go out 16 days. So that would be, let's get our line and let's grab our vertical. January 19th, 2023. You should have descension. So if you make your market top January 3rd on this daily pattern, if this pattern plays out as it has been playing out for a year, you will drop. There will be 16 bars at some point over the course of time, and you will drop, and this is projecting you to 10,753. If the market just totally got nuked in early January, an unforeseen catalyst, escalation in war, Powell gets super hawkish with rate hikes, who knows what happens? Look where your bottom has you at the 2618. 3,122. I'll revisit that number later. But January 3rd should be your top if this pattern continues to play out and we have the upward momentum. January 19th would be your next bottom. But do we have any other mathematics that can show us that we can get to this number, 10,753? Back on that weekly time frame, let's take these fibs off. Let's do a couple of things here. Let's get to our price range. Let's look at these waves of decline. This was a 52% wave. This is all part of sequencing, guys. And then this was a 64% wave. And then this third bottom here. So what we want to do here is get a projection of these two moves and these two tops. So 52.39, 63.51. You want to use geometric mean because that's what you use to measure cycles of growth and decay. So 52.39, 63.51. Geometric mean calculator. And submit data. 52.36, 63.53. gets you 57.67. Let's go ahead and look back at this 57.67 and see what this actual decline rate would be. 57% move from if we hit this target, okay? 57% move, 53% spot 50 is all you need to get to 10,753. Again, that is a geometric mean of the two previous price declines after you have these 40+% waves up. So this is very important to understand. This is how you develop probable trades in the marketplace, high probability trades. This does not mean the pattern will play out. The pattern has been playing out for a year, gave me my most personally lucrative trade of my lifetime, as well as this recent 27% drop. So we're going to continue to watch this play out, and this is very important to understand. So watch for January 3rd. So what do we need to do now? We need to see, obviously what happens Tuesday. Lower CPI, what happens Wednesday? A very neutral POW. If we get that combination, we got to look for our up move. If we don't get that combination, we're going to be descending. So what we need to do, here's the completed version of this, by the way, on the daily time frame. Nice and finished without all the drawings. So you can see your decline here on the daily time frame with your key dates, okay? And your 1618 and of course your 2618. Let me show you one more thing, and then I'm going to get into the daily time frame and the 8-hour and the 4-hour, what we're looking for to see if we're going to get this move up to our target. But just pay attention to that 3064, again, based off that 2618. Let's go back to that weekly. I'm doing a lot of stuff on the weekly here. I walked you through the Fibonacci in the beginning for a reason. One reason is quite simply this. I showed you how we got that 10,500 price, okay, a year ago. Well, again, another key concept here, just using a fib retracement, guys, using your absolute low, going up to your absolute high. This is your wave 3 in a law of 3 pattern. Look at your 1618, 3851. It is market symmetry. If you look at where your pandemic low was, it piles right on top of your 1618, 3851. You look at that daily projection of where you could get to, and that time here on the 2618, 3064. People don't think this is possible. Having personally lived through and traded the last 2 bubble cycles, this is not only possible, it is definitely highly probable you will be below 10K this year, 2023 coming up. And when you have targets and you're getting confluence back at that 3,000, 4,000, 4,600 level, that is a highly probable target in my book, no matter how I look at it. So I'll continue to do that. And guess what? What will happen on the news is quite simply there'll be other failures. Other things will happen. And then you'll have analysts come on and say, nobody could have predicted this is yet another black swan failure. But you know this because we have advanced techniques. We understand the divine blueprint in the marketplace. And if you can decipher and decode the vibration of price and the vector of time, you can get highly probable trades that have been playing out all year long. Now let's go ahead and get into the TA. That 23.1 target, right? 23.1 for our top, if we can accelerate to that level and meet that harmonic pattern. That 23.1 target back here on the weekly, if you look at that, that's also resistance on your GAN fan. There's your January 3rd date. Where's your January 2nd? It's weekly time frame. So right here, it's resistance, that same level, 23.4, 23.2. That's resistance on that GAN fan. So it makes sense. Not only does it make sense from the techniques that I showed you, it makes sense in the concept of price waves, tapping resistance, failing at resistance, coming back down to a new low, as you've been doing all along in this price decay vibration cycle. If we go ahead and fast forward here to the daily time frame, I truncated my Wyckoff trading ranges, and I want to show you why. I just want to take a projection here in this range. I truncated this. Normally, I would put my Wyckoff trading ranges on the wicks. I do this in equities all the time. But with Bitcoin being so volatile, and then when you have fibs line up so beautifully to match your actual lines in Wyckoff, so I have my 786, 17,567. If you're looking at this in a traditional TA sense, guys, and here's that date, obviously, of that November 5th candle for that drop in the 28% trade I gave you guys. If you're looking at this in a Wyckoff perspective and just a basic TA day perspective, as a matter of fact, I mean, you're making higher lows, right? Again, nothing to get too excited about. You're making higher lows in a predefined range. We need that external catalyst of the CPI and POW to be favorable for Bitcoin to move up. But if we do move up, what you're looking to do, and you guys have heard me and shown examples of this over and over again, break out on top of Wyckoff. Maybe you get rejected at the 1 fib. You want your pivot. You need your Livermore pivot to form in classic Wyckoff, and then you accelerate up. Okay, that's what we're looking to do. Now, Bitcoin being so volatile, who knows if the market really takes off? You might just get some big up candles, a slight back up move, and then a pivot out at a higher level. So this is something, part of the reason you got to watch the channel every day. You watch the channel, when I put out videos, we're going to track this and look at the trade setups if this plays out. But looking at the downside, so I don't have people say, wow, Brendan's so bullish. You guys know I look at upside and downside. This is the same thing, guys. The downside hasn't changed for me, okay? The downside is very easy to look at. We have the 486 at 16,841, 618 at 1649, 786 at 16, 1 fib at 15,469. Obviously, you've tapped that twice. 1272, 14.7, and I've been saying this over and over, the 1618 at 13,820. If the CPI is hot, or combination of POW comes out hot, bigger rate hikes, whatever, you can look for maybe some volatility that day. Obviously, the market likes to go up and down, and this would be my target, the 1618 at 13,820, maybe bouncing off some of these levels, but this would be my next leg down, strong support target for Bitcoin. Again, that's the easy part to do. Now, what I want to look at here as well is, are we coiling up for a move? Trading in volatility, look at your MFI. MFI is in bullish, okay? You're bullish here. VROC volume's pretty basic. ATR is still elevated. Knowing that the ATR is elevated, I know our Caterpillar is not going to look very contract, but let's go ahead and look anyways. So let's go ahead and zoom this out. We want contraction like this. This is what we got right before a 28% drop. We're still expanded a little bit, but this is why you cycle through time, okay? Cycling through time. If we cycle through time, let's go ahead and lay out our fibs again for the upside projections. You can see we're on top of this 618 at 17,119. And of course, the 786 once again. As you guys notice, I like to lay my fibs out the same way, regardless of daily, 8 hour, 4 hour. I like to have the same fib levels that I'm looking at for key moves. So we want that pivot out. 8 hour presents differently, right? 8 hours right here. You can get your pivot out here if you get that. That's assuming you don't break down. Now, when we're looking at this, though, the key reason I want to look at this is volatility. Volatility is compressing on the 8 hour. Remember, this is going to start cycling down. You're getting cooperation with the marketplace. Unbeknownst to the average speculator, the average trader doesn't realize you have a move coming in the market. The catalyst is external. If you only look at price on charts, you have no idea what the Fed's doing. You have no idea what inflation's doing. You have no idea that volatility is coiling up for a big move. You have this on the 8 hour. You have this on the 4 hour, guys. You need to pay attention to this stuff because this is how you get big moves in the marketplace. Look at that expansion, go into contraction, okay? And your catalyst is going to be those two events on Tuesday and Wednesday. All right. I hope you guys enjoyed this video. You got the upside targets. You got to see some advanced esoteric Fibonacci techniques. And you got to spend over a half hour with me on a Sunday. Guys, if you do like this, please do like and subscribe. Consider checking out our Discord. Keep the content coming. And if you're going to trade, check out our 2 sponsors. All that in the video description. And I am active on Twitter. Give me a follow. I hope you all have a fantastic day. Equity video, commodity video coming out later today. Look for that. Take care, everybody.